Okay. Thank you for attending investweb.club. We've got our presentation ready now with James Blacks from the Canadian Securities Exchange with the top 5 reasons to list on the CSE. James?
Great, thanks. Yeah, wonderful. Thanks, David, and thanks, Raymond, for setting this up today. Just a bit about myself. I have been with the CSE for close to 7 years now. What I'm going to talk about today is, it's a pretty broad presentation on what we're doing as an exchange. So specifically from the listing standpoint, and if you're a private company thinking about going public, exchange, certainly this is the presentation you should watch, and we can follow up with Q&A after, or we can take this discussion offline. You'll have my contact information at the end. So I think to get things started, I think it's important to put into context the history of the CSE and to overview the mission of the organization. As a bit of background, the CSE was founded in 2003 and received its recognition order as an exchange by the OSC in 2004. Our name back then was CNQ, which evolved to CNSX and then settled on CSE, Canadian Securities Exchange, a couple years ago. You'll see I just put up a chart here, and it kind of shows where things are at today. There are a couple new entrants such as Equitas Neo and NASDAQ, which is also making its application to have a listed market. But at this time, they're still going through that process. But back to the original motivation for starting this whole thing, it was pretty simple. At the time of inception, there was a clear competitive vacuum in the Canadian exchange space. The TSX, the TSXV exchanges were the only game in town, and I think we all know what happens in monopolistic marketplaces. Innovation slows, and costs are not subject to market pressures. So to us, this presented an opportunity to build an exchange that was focused on leveraging modern technical infrastructure, primarily the web, while re-envisioning the role an exchange plays in capital markets. At its very core, the CSE has strived to create the platform for emerging companies that results in the lowest cost of Canadian public capital. Sorry, if I can just say, if there's someone still mic'd, which is it's making it a little difficult to speak here, so just a heads up. So to deliver on this value proposition, we've had to focus on several key deliverables. The goal of this presentation is to share the 5 reasons to list on the CSE that, when combined together, create an unparalleled value proposition for companies seeking an exchange listing offering liquidity and funding opportunities that might not otherwise be available in private markets. So let's start with reason number 1, which is straightforward listing requirements. At the core of our offering, we've understood that we need to eliminate as many of the redundancies and complications that are traditionally associated with listing entrance requirements and procedures. Look no further than our policy manual, which is about 1/6 the page count of the TSX Ventures. Providing a lean policy manual, it doesn't mean that we have created shortcuts or overlooked important roles. To the contrary, in fact, many keys to entering our market are dictated by existing national policies that are referred to in our documentation. So we place an emphasis on not re-regulating rules that companies already have to comply with. It's also important to emphasize that the rules we have in place are catered to early stage companies. We understand that the majority of the early stage capital is coming from VCs and private equity sources like angels. And there are limited venues in which to raise public capital for companies evolving out of their startup phase. We see a distinct gap here in Canada specifically. So case in point, I mean, realize that a company listing on the NASDAQ needs a market cap of around $1 billion versus going public on the CSE, where we see companies entering the market with single-digit million market caps. It's a much lower threshold. So, you know, I look at the media and VC-driven narrative of going public and its association with the big exit, which typically only happens in cases where, you know, a unicorn type of company like Facebook or LinkedIn goes public. But what we've seen is there's a huge need here in Canada as well to open up public markets to earlier stage companies to raise capital or at least offer that opportunity so they can iterate their business and maybe one day be a unicorn or a big private takeout. So with that in mind, I want to transition to the second key point, which is we're a connected exchange. As mentioned, one of the key reasons for going public is to provide new opportunities for companies to attract capital and introduce liquidity into the company. The key to any exchange offering is to facilitate a marketplace that is transparent and connected through all the venues that an investor would expect. To that end, the CSE has made a tremendous amount of progress in establishing ubiquitous access to financial portals and online discount trading platforms. For instance, in Canada, CSE securities can now be traded on 13 discount brokers, including all of the bank discount arms, including Scotia and TD and some of the others you can see here on the slide. For data, the CSE is the only Canadian exchange with real-time data offered on Google Finance, and stock information is now available on Yahoo Finance, a feature that was in demand for many years and was recently launched. So again, you can see some there, and we're quite pleased with how that's evolved. And I might add, any new exchange is going to have to integrate all of these platforms as well. So it's quite a barrier to entry when you look at other marketplaces. We're also really excited about our new website. The CSE.com was recently launched in early April. And our new site offers even a greater depth of information about our securities, including market depth, which we provide on a 15-minute delay. I'll also add that all of the CDR information that a company has to post also gets pushed to that site as well, to our website. So it's actually a very convenient place to present all of your public company disclosure in one simple area. But of course, being connected isn't just a matter of online presence. In 2015, for example, we instituted a series of events called CSE Days. These took place in Vancouver, Toronto, Montreal, and New York. We invited issuers from each of the Canadian cities to spend a day with us talking about hot issues that are specific to listed companies, about how to raise capital, about how to get liquidity, things like that. We concluded these days with a mixer event which invited a bunch of the corporate finance community to interact with their companies who gave 2-minute pitches. Listed companies found it worthwhile to meet not just their peers, but also to be introduced to a broader cross-section of the advisors and corporate finance professionals working in each city. So it's a real amalgamation of the capital markets community all in one spot, interacting with our companies. We're going to be hosting these events again. We just went through our spring series, and I encourage you to go to our website and sign up for the fall sessions, which we'll post this summer. So as you can tell, we make it a priority to provide companies that join the exchange to leverage the platform to spread their message, connect with investors, and evolve their story at a pace that is acceptable to their constituents. For me, the website and all these other things that we put out, the CSE Quarterly, our CSE Day, we really are a platform for storytelling, and it's important that companies come here, realize their importance to us as well. They're the story. We're just the exchange, and we're really excited about some of the new stories that we see on this marketplace. So speaking of which, I'll move on to our third major advantage, which is enhanced disclosure. So, as mentioned in my previous remarks about connectivity, we offer a robust online platform with which companies are required to post all of their material information, such as news releases and financial information. One feature unique to the CSE is the monthly progress report. Issuers post this report to keep investors apprised of business updates, and it's a useful digest for anyone looking for a snapshot of a company's activity over a given month. We feel strongly that this extra bit of work done on behalf of our issuers to provide this monthly update is a useful engagement tool for our companies, both with existing and potential new shareholders. So it's sort of like what I call an MD&A Lite. It's a quick little management report just about the current progress of what's going on. And in fact, some cases, the monthly report is so full of good information, it's actually used as a press release on its own right. So when done correctly, it's a very useful tool. So now that I've mentioned enhanced disclosure and a little bit of extra work that goes behind it, I actually should now mention how companies will save a significant amount of time by discussing advantage number 4, which is streamlined regulation. In tandem with enhanced disclosure, we have constructed a streamlined regulation regime that greatly reduces the time and transactional impact of doing business on the exchange. For example, many of the transactions completed by issuers on the exchange are not subject to a direct exchange review. So listed companies are free to transact, raise capital, and make announcements on the website without the customary exchange reviews levied on other competitive markets. This is something that a lot of people come to us and say is probably the biggest advantage. It saves a tremendous amount of time and cuts down considerably on the ancillary costs typically incurred to review routine transactions. So legal fees, back and forth is reduced, therefore there's a bit of a added savings just around that interaction or lack thereof. CSE will in fact step in whenever needed, of course, for requested reviews or transactions, but especially those that may be fundamental changes to the company. So in many cases, the company is responsible for the completeness and accuracy of disclosure presented to the public, but we do fulfill our regulatory obligation to review certain transactions. So having said all that, I'd like to bring it home with the 5th, but certainly not final reason to list on the CSE, which is our low fixed fees. As I like to say, our fees are simply a symptom of a model of conducting business. With an emphasis on complete, regular, and accurate disclosure, much of the time that is typically spent complying with bureaucratic processes can be spent on business building activities at the company level. You know, understanding that cost management is critical for our clients, we offer a fixed fee structure. Listing on the exchange is $12,500, and the monthly maintenance fee is $500. Other than a nominal processing fee for personal information forms and supplemental listing fees, so like cases where an issuer company issues a new class of security, like a warrant, the CSE maintains a fee regime that is friendly to early stage companies, certainly much lower than our competitors' fee schedules. So the case in point, this is a very broad graphical representation of us versus, say, the venture fees, which really have a lot of scale in them depending on what the company does. You know, I think it's important that you know, we don't charge for certain services typically levied on other markets. One good example is concerning private placements. The exchange does not charge a percentage of any funds raised on the exchange, meaning the money raised by companies listed on the CSE is available to spend on business generating activities and not on fattening up the exchange's bottom line. I think we can all agree that in this environment, specifically this time in our history, every dollar raised needs to go towards building business. So we certainly feel strongly about that. So I promised you this was going to be pretty broad. So there you have it. This is the 5 reasons to consider listing on the Canadian Securities Exchange. Certainly not the only reasons. If I may, it should be noted that we will be publishing proposed changes to our listing criteria in the next few weeks. We've posted some black line policy on our website, and just keep in mind, we have not amended these thresholds to qualify for listing since the material was originally filed with the OSC, the Ontario Securities Commission, in 2002. So this is a long gestating update. But it should be said, we will be raising the bar. And I do not think the new standards would change the complexion of our market much if they had been in place several years ago. Our main emphasis with the new policies will be slightly higher thresholds for things like working capital and clear definitions of acceptable share structure and public float requirements. We're also likely to introduce continued listing requirements that will entail certain enterprise value, size, and business activity thresholds with the notion that the companies listed on the exchange must have a workable business plan and sufficient capital on hand to fund their business for a reasonable length of time. So we really want to have an emphasis on not just having a good, front door, but also a regular check-in. You hear this term possibly in the press around zombie listings, and it's important to have churn in listings and RTOs and all these other transactions that are common, but we need to also hold our listings to a standard throughout their history here. So to conclude, I think to me what has been the most encouraging thing has seen this exchange grow over my last 7 years and see real growth, not just in our business, but the companies listed here. From a listings perspective, we've seen significant growth of listed companies. We were around 220 a couple years ago, and we're almost at 330 now. Considering our competition has seen a reduction in listed companies in that same time span, I'm really excited about the prospects for growth in the coming years. I really feel like we've proved the concept, and now we're seeing the fruits of our labor. And it should be noted, another really important milestone I'm happy to report is that trading volume recently reached the highest level in the CSE history for a 4-month period. Volume surged 34.7% year on year from January through April 2016 to a total of 1.15 billion shares. So what that means is, the activity from a trade perspective, from a trade volume perspective, has never been higher. This last period also outpaced the previous 4-month record, which was last September through December, and that outpaced it by 22.7%. So if you look at the chart here, you can see there's a trend, and we like to, this is a 5-year trading trend. If you go from our total historic, the hockey stick looks a lot better. So you can see that not only are companies listing and raising capital, but they're actually being traded, and that's a critical component, obviously, to any market. So in conclusion, it may sound like a cliche, but we're always bringing everything back to our overall mission, and that is to deliver the lowest cost of public capital to entrepreneurs looking to tap the Canadian equity markets. That's really what we're striving for. With that very clear mandate in mind, we can measure all the activities that we undertake. We believe that not just given our fee structure, but the overall cost structure for companies listing on our exchange, that we are in fact achieving the lowest cost of this public capital. So this is even comparing possibly to things like crowdfunding. We really think that the CSE fills a gap that people are trying to fill with things like crowdfunding. We're already there. So it's something to think about if you're considering that type of methodology to raise capital. Now, we believe that if an entrepreneur is evaluating its options to go public, the CSE offers several compelling business, reasons through which to bring their business. I think, the 5 is a good starting point, and I'm certainly happy to answer any more questions here today or after about maybe some other areas you want to know about, but that's what I wanted to cover, just those 5 reasons. So if there's any other questions or comments, please chime in. I'm here for the next few minutes.
Excellent, James. Thank you very much. We do have some questions, and actually one point of order from Eric, who said at the beginning we were being heard as we were setting up. Our apologies for that. And Eric suggested we have music playing when we're not on. We do have questions coming in from Eric, and the first one is, how does the exchange make sure that companies actually provide the monthly updates?
Yeah, that's a great question, and I think it's something we have to continue to emphasize in our ongoing continued listing requirements. They are required. They're required, I believe it's 5 business days after each end of month, and we do scrutinize on a selected basis who gets looked at. It's pretty obvious when companies have missed a couple months, we flag those and we have to follow up with them. It's, I think the bigger issue there is, as we get bigger, how do we continue to do it? And it's something that I know we're always trying to figure out. So one thing with the new site that was really fundamental to us growing our business was building some automation around processes. And I think one area we're going to start to see automation is around flagging incomplete information. So as we continue to digitize and move things forward in that respect, that's something we're going to have to do on a more automated basis. So it's our responsibility. It's totally
right. Thanks, James. I had another thought that it was pretty impressive to more than one person that the listing requirements were like 7 times as big, at least visually there. What makes the big difference then? How does the CSE have the application and registration be so efficient comparatively? What's the big difference there?
It starts with our recognition order that we established with the Ontario Securities Commission. So our core philosophy is that disclosure, timely disclosure, accurate disclosure, trumps, anything that we could do as far as passing a business merit review. So I think it's that core recognition and philosophy as an operating business to say, what value do we add? And the value that we add is to provide a platform for companies to tell their story, to meet their regulatory requirements as far as quarterly and annual disclosure, and we obviously added that monthly piece. But it's also the fact that we don't staff or spend a lot of time or create regulations that focus on us passing business merit review. So if you're a technology business and you've said to us, and I think actually let's go with a real example. Lithium, hot market right now. Someone says, I think lithium is going to be huge, and we think it's going to be something that investors are going to want to invest in. And we see X, Y, and Z opportunity and market growth, and we're going to go do this. This is our projection. Their projection can be whatever. I mean, we don't care. It's up to them to convince shareholders that, or potential investors, that what they're going after makes sense, and that the money they raise is being spent, appropriately on achieving their business milestones. So to that point, I think we're going to start being a little more active in making sure that money raised by issuers is being spent on the milestones they've set, but we're never going to tell them what their milestones should be. And I think that's an important distinction.
Excellent. James, one of our American listeners has been asking about, is it possible for U.S. startups who are exploring the Canadian market to list on the CSE? So I think that's a pretty straightforward answer for you.
Absolutely, yes. It's actually an area where we're focusing a lot of time. We were just at, Emerge Americas in Florida. We're just at TechCrunch Disrupts in New York. I mean, we think the U.S. has a fundamental issue, which is they don't have a junior public market. So OTC obviously has the QX and QB tiers, but we work really tight with those guys. And we think that the best way to platform into North American public markets is UCSE. You use that, you become a reporting issuer in Canada, which means you file a prospectus here in Ontario or BC or wherever, and you leverage that listing, and you can have a quotation in the States, but we really feel like this is an efficient way for a U.S. company, for a startup perhaps, to start entering the public capital markets. You can even be listed up here. This is important. You can be listed in Canada and then look at something like, say, Regulation A+. If you're not an SEC filer, you can actually use Regulation A+ and do some of these exempt or distribution, the fundraising capabilities that are offered through Reg A+ can be leveraged as a CSE listed company. So we're starting to see a really interesting cross-section between what you can do on our market and then also what you can do as a quoted or private or not listed security in the U.S. It's more to be told on that end as things move on.
That's good. Basically, that was a long yes.
Yeah. Sorry, I got to throw the context in there. Yes.
No, I appreciate it. I think the response I just got from the American was, in a sense, then the CSE is an alternative to incubator or tech startups. You always think that if you have to list on NASDAQ, you have to have $1 billion market cap. Well, there's the OTC and all those. So I think the CSE qualifies really well on that stage. And just before you answer again, I'll jump in with Diego thanks us that your answers are pertinent and to the point. But what would be the biggest challenge for a software as a service startup to get listed, and how long would it take in terms of time frame?
Sure. So I'll answer the first part of that question. Biggest challenge for any company is that obviously you still have to raise money. I mean, I think I threw the note in there that you don't have to conduct an IPO. So what that means is you don't have to actually go get an underwritten prospectus and offer securities, but you do need to have working capital. And we've probably got 20 or 30 applications across all industries that are sitting there ready to go if they could just raise the money. And it's not a lot. Like I said, we're raising our working capital minimum to about $200,000. So that to me is the biggest holdup. It's cross-sectional. It doesn't matter who you are. Software as a service, I mean, we've got a few really great examples of companies like ReSAS Services, symbol RSS. Look at them. They're a fantastic example. They actually did an IPO, and that was 4 or 5 years ago now, and have just continued to evolve. They wouldn't have made sense as a VC investment. Their scale wasn't going to be a matter of a couple of years, and they weren't going to be a multi-billion-dollar business, but they've now, you know, one of our largest market cap issuers, and have done phenomenally well here. Time frame is I'll make this as quick as possible. Sort of a two-part answer. First of all, it depends, but you know, if we get a complete application, if a company is on track to become a reporting issuer, say they're going to file a prospectus here in Canada, and they've just basically sent us everything that is going to the commission. Our process takes as long as their process, so it can be 6, 8, 10 weeks. It really depends. But what you need to get to that point is you're going to have audited financials. You're going to have an appropriate share structure. You may have to have raised some capital, and that's a really open-ended equation, part of the equation. We like to say to companies, you know, take a look at our policies and try to at least get a sense of where you need to be at before you apply. But as soon as you start having to make stuff up as you've applied, so you've got to start raising capital or mess with share structure or whatever, that can really add lag. So I guess my key takeaway for that question is, your key offering is look at a company like ReSAS, find a analogous company that's already done it, look at their initial application disclosure and see what they did. And frankly, that's going to be super helpful, because then you're going to have a case study of how to do it.
Just as an adjunct to that, or an addendum, is there some kind of standard form you send out that's a checklist that gives you, here's all the things you need by the time you want to make an application?
Yeah, Policy 2 and Form 2A. Those are, if you want to start getting in, if you're really serious about it, and those are the nuts and bolts documents you want to look at, because they have all the same headings and dictate all the qualifications that you need to meet to list. And then there's a Form 2B, which also lays out some of the more particular things that you need from a legal perspective. You know, ISIN number, and having legal opinions and PIFs, and et cetera. So as much as we've tried to simplify things, we still end up looking at a stack of papers when we review a file, because
Excellent.
That's what's required. Yeah.
And I guess the PIF you mentioned is personal information form, just in case someone's not aware of that. I'm just going to go back a second. This is actually my question to you. I've actually been focused on lithium for quite a while, and you gave an example of lithium. You know, it's such a hot market, and people wonder about bubbles and so on. How does that kind of macro affect the CSE's, you know, qualification procedure? Did you actually take into account it's not just the company applying, but it's in the midst of, you know, some big thing that might happen or not?
You know, we always look at what does the company actually own. So, you know, we need to make sure that, and it's stipulated in our policies, do they have an interest in, say, a property, or actually own a property that's exploring, let's say, use exploration as an example for lithium, right? In Canada, we have the 43101 standards, so you have to comply with that if you're going to have that as your core asset. So those are two major check marks you got to figure out, and that kind of, you know, helps prevent kind of really curious things from happening. Sorry, I missed my third thought on that one, David.
No,
but, actually, you know, I'll go back to one thing where we saw a lot of activity around the medical marijuana space a couple years ago, right?
Yes.
And that was a highly speculative space. We saw a lot of issuers, you know, jumping ship from mining and going into this space because, you know, MMPR was going to blow the doors open on opportunities to cultivate, grow, and sell into this managed system for marijuana distribution. We saw the market go crazy over this for a couple months, and you know, that was a certain situation where we actually had to kind of work with the regulators to make sure that, you know, we were all being responsible about this, because people will get carried away. And, you know, that's just on the entrance side. What people do in the market trading, you and I both know it can get wildly ecstatic and wildly low and depressing, and there really isn't anything we can do. And really, we just got to make sure everything is done according to the rules, the trading rules. And we have a great regulatory body in Canada called IIROC, and they handle a lot of that workload. So it should be noted we are an IROC regulated marketplace. It's important to say.
Good stuff. I'm just going to ask my partner, Ray Rich, to either summarize or ask any other questions that didn't come up yet. Ray.
Yeah, I can't think of any other questions. I think all the questions that were addressed to James were very thought-provoking and well answered by James. I think what I would like to say is really thank you on behalf of James and David for everybody attending, and we hope that this information can help you, motivate you, inspire you to do more business on the CSE.
Thanks, Ray. And just to wrap up and bookend, thank you again, James. Excellent answers, actually, but I thought they were pretty good questions, too. So thank you, everybody, for attending.
Yeah, thanks, and I look forward to doing this again, and certainly your feedback's appreciated as to how this went. It was the first one, so.
Excellent. Good job.
Yeah.
Thank you, everyone.
Cool.
Cheers.
Cheers.